You know, if you watch the market statistics every day, you'll know that just about every day, certainly every week, there are stocks that more than double in a single day. Well, the question is, why does this happen? And more importantly, how can you find them? That's what I'm going to show you today, provide my normal analysis of the markets. We'll figure out where stocks, commodities, currencies, and the bond market are likely to go. And then we'll look at the trade of the week at the end of the video. But all right, let's get into that topic of how do stocks double? Why do they double? It's very simple. When you have a catalyst, some news release, some rumor on a stock that doesn't have very many shares available to buy, you get very strong demand, but very limited supply. And that's what causes these stocks to make these big moves. Now, it may seem impossible, but this happens pretty much every day. It's certainly every week, as I said. And it's a combination of factors. Catalyst, low float, which is the number of shares available to trade, and anything less than 20 million. And then the third important thing is the madness of crowds. When you get a large crowd gathering around a stock that doesn't have very many shares outstanding, it can make a very strong, quick move. Now, usually these stocks can go down as quickly as they go up, and so you must have a strategy for selling them. But on the matter of the madness of crowds, when we talk about that, what we're really looking for is evidence that there is a crowd gathering. Well, as I've talked about in many of my videos, the evidence is abnormal volume. So if a stock with not many shares outstanding has a catalyst that drives the buyers to trade the stock abnormally, create very abnormal volume, now you've got your recipe for finding these stocks. And if you've watched my videos, and make sure you're subscribed to the channel here, because I do videos on this all the time. I've been doing it for many years. It's a simple concept that works really well. Let's look at an example. So this is a stock from this past week. And this is a very short-term chart, a 1-minute chart. And you can see here on the previous day, there was no price action and there was no volume. Then in the pre-market, the stock started to trade much higher than normal volume. And then in the regular market session, even more volume. The catalyst, I have no idea. You could go find the news and read what it was all about, but the stock started to behave abnormally here. That's our action candle indicator, the pink and yellow dots, which looks for statistically significant abnormal action. Then we look for chart patterns. We get a break from a good chart pattern there. We get a break of a pullback right there. All of these contributed to this quick move to the upside, which was, started at 10 cents, hit 84 cents there, 89 cents. So a huge run. Now I want to show you, however, what happened after. Because remember I said these stocks can go off and go down as quickly as they go up. Well, here it was, no action, abnormal volume, driven by a catalyst. Stock made a big run, but then the crowd moves on to the next story and the stock falls lower. And this really demonstrates why you must not sit around and wait for the dream. A lot of times people read the news and they believe in the news and they wait around and they end up taking a big loss. All right, let's get into this week's market analysis. The volatility in the market has started to come down. That's a good thing. It means investors are feeling a little less fearful. And there's some signs that we could see a bit of a pullback in the near term, but for the most part, markets look pretty decent. So let me jump into the Stockscores website here. A reminder that I do a weekly email newsletter most weeks. I didn't do one last week, but most weeks I do. And you can see here, you can just register for that for free. I provide some stock picks, some analysis of the markets, that sort of thing. But let's get into this week's analysis. S&P 500 chart here, SPY. You can see the big bounce back from being the heavy sell-off on the tariff and trade war concern. And we're still in an upward trend. We're coming into this resistance zone, so upside is pretty limited here. My concern is that we could build a falling top and break down, and that would be a negative. So if this upward trend line is broken, then I want you to get defensive again. If you manage to, buy the bottom fish here when the market was heavily oversold, the distance from the trend line down was a far distance. That was a good sign. And then we broke up from a rising bottom right here, and we've just been moving up ever since. But for now, I don't think it's a good time to be a buyer of the market in general, although certainly individual stocks could be okay. Looking at the 3-year chart, you can see that the long-term upward trend line was never broken, right? We hit it once, twice, 3 times, bounced off of it. Now coming up into here. If we get up to there, we're probably going to pull back and do this. If we make a falling top, then we could retest that upward trend line. NASDAQ chart, very similar, except the NASDAQ chart did actually break its long-term upward trend line. So here's the 3-year of the NASDAQ. And that means that this is very strong resistance now. When you break an upward trend line, that establishes the highs as resistance. So when we get up to this zone, expect that NASDAQ tech-heavy market to get stuck. How about the small caps? Small caps have been underperforming the large caps for a very long time. Not a big deal though, because most of the best trading opportunities come from the small cap stocks. Here is the downward trend line on the daily of the small cap market. So you can see there where we've risen up to it. That means likely to get rejected at that trend line, or at least go sideways and then try to break. But I think that the upside is a little bit limited in the short term because we are stalling at that trend line. Moving on to the Canadian market, which has been surprisingly strong, it's actually broken to new highs. It did that on Thursday, just barely closing at a new high there. It's a little more obvious when we look at the 3-year weekly chart. There you can see that it had the sell-off on tariff concerns, but it's actually looking like one of the healthier markets that we cover. How about gold? Well, this is one of the reasons why the Canadian market has been strong. Gold, however, had this great run, obviously. I've been a little bit negative on gold the last few weeks because I thought it was overbought. Why do we say overbought? Well, it's really easy. Overbought occurs when you have a linear trend line and price runs away from the trend line. See, the distance down to the trend line is quite far. That's an overbought market. And we did something here called a bursting bubble candle. That's what I call it. It hit a new high, closed below the open on heavy volume. That's a sign that the buyers are just irrational, emotional FOMO traders chasing the market higher. I think gold is likely to pull back to that upward trend line. Still not a break of the upward trend line. It's still good long term, but expect some profit taking in the shorter term. All right, how about oil? Oil's been very choppy, kind of negative the last few months. If we look at this 3-year chart, you can see that it's really just been stuck in this trading range for a very long time. We're at the bottom of the range, so it should start to come back and move higher, but we need to break this downward trend line first. We haven't done that yet. Something to watch for on oil. Currencies, take a look at the US dollar, and here it is. You can see we are still in a downward trend on the US dollar, but starting to build rising bottoms. And so if we see a break of that downward trend line, that could be a positive for the US dollar. For now, fairly negative to neutral on the US dollar. Looking at that 3-year chart, the reason I'm not too worried is because it's at very good long-term support. We just need to break that downward trend line to start a little recovery. On to Bitcoin. GBTC is one of the ETFs I like to follow for Bitcoin. It's not necessarily the best one, but it's very liquid. And that is resistance there. We've had a nice run the last couple of months. And looking at the 3-year chart, you will see that we are in that long-term upward trend line. The market held the upward trend line, ran away, pulled back, ran away, pulled back. We're on the next runaway, so it looks fairly decent. I don't know that it's a real good time to be a buyer. I'd rather be a buyer when we're at the upward trend line down here, as opposed to chasing the upward trend line when it runs away. And then finally, the chart of the bond market, TLT, and I'm going to show you, well, here you can see on the daily interval, we really have falling tops. That means the prospect for lower interest rates in the US is fairly negative. And my concern is we're testing the support zone. If we break down through that, that means interest rates actually going higher in the bond market. Looking at the 3-year weekly chart, you can see that the general trend is down. It's been sideways for over a year, but building that pessimism slowly. So let's take a look then at my ratings. Short-term bullish on all stock markets, only bullish on Canadian stocks long-term because it has broken to new highs. Still neutral on the American exchanges. Gold neutral on both time frames. Oil neutral on both time frames. And by the way, the reason I'm neutral on gold is simply because it's overbought. I still think the really long-term picture is okay, but I think we're probably seeing some profit taking here. US dollar neutral on both time frames. You could still be fairly bearish on the short term. Bitcoin bullish on both time frames. Bond short term and long term neutral. All right, well now it's time for the trade of the week and another example of a stock that made a big gain in a single day, and it all started with abnormal activity that was driven by a catalyst. And here you can see nobody cares about the stock. Then it comes alive, starts trading really abnormal volume. It had a really good entry point right here, that action candle breaking from an ascending triangle. That was at 25 cents, and it went to 45 cents from that signal, but certainly a double from the lows, 20 cents to 45 cents, 43 cents on that trade. And it all starts with a catalyst, which drives the madness of crowds, brings in liquidity on stocks that don't have a large number of shares available to trade. We call those low float stocks. We find them every day on Active Live and Stockscores. You can go to stockscores.com to learn more about that. If you've enjoyed this video, please click the like button. Make sure you're subscribed to the channel. And as always, trade well.